Good evening everyone, this is Abid Khan and you are watching Karachians Academy YouTube channel. So we were doing CIEAS level accounting paper 9706, paper 2 version 2, May June 2022 attempt, right? So in our last lectures we have done with question number 1, 2 and 3, question 1 and 2. So now we will do question number 3. So let's move on to question number 3. Okay, this is question number 3. What it says, N Limited is a trading company. Okay, N Limited, the statement of financial position at 31st December 2021. Okay, assets. Okay, non-current assets, 500 1520, current assets, inventory and receivables. Okay, then total assets 1585, equity and liabilities, equity, share capital 900, okay, and share premium 180, retained earning 202, okay, then total equity is 1282, fine. Then non-current liabilities, these were the equities. Non-current liabilities 8% debentures 2026, okay, so 2026 8% debentures, right? So this is your long-term liability, non-current liability, right? Current liabilities, you have trade payables and bank overdraft. Okay, fine. So these are the total liabilities, current and non-current, 303, adding with equity 1585. So both means assets and liabilities, assets and equity plus liabilities are 1585, right? Move on. The following information is also available. Purchases for the year were 600,000. Okay, and what they are saying, of which 80% were on credit. Fine. Very carefully, first read the question and mark the important point. Credit says what 30% of all says. Okay, right? Company had a gross profit margin of 40%. Fine. The company, this is GP margin percentage. Okay, the company's gross profit for the year ended 31st December 2020 was 42. This is your gross profit. They have given you the gross profit, right? Company's profit for the year was 182,000. Fine. No interest was charged on the bank OD. Bank overdraft is there, which is bank overdraft is 11. They are saying no interest was charged on this. Then what the other interest is? The other interest is this 8% you have to pay interest, means this is paid but no interest is paid on the bank overdraft. Okay, fine. Then let's move on and see what the question, what is requirement. Calculate following ratios. Fine. For the year ended 31st December 2021. Number 1, they are saying trade payables ratio. So okay, so trade payables ratio, if I want to work out a trade payables ratio, so it is very, the formula basically is trade payable ratios, or we say payable turnover, trade payable ratio, or we can say trade payable turnover. So the formula is total trade payable you have, you simply divide them by purchase per day, yeah, daily purchases per day, or you can say daily purchase. Fine. Okay, what other? So we need purchases, and it means the credit purchases. Always remember credit purchases, because trade payable is relating to the credit purchases. Fine. Number two, trade receivables turnover. So what is the formula for trade receivable turnover? Trade receivable turnover in days, you have to calculate in days. It also has the same trade receivable, and you divide that by daily sales, or you can say sales per day. Again, sales means credit sales. Credit sales, because you are calculating receivables. So you need sales, you need sales per day, you need purchase per day, right? Trade receivable and trade payables are there, but you need to calculate them. And the third one is return on capital employed. So return on capital employed, its formula would be it should be profit before interest and divided by capital employed. What the capital employed is, you know well, capital employed means your equity plus long term debts, or you can say non current liabilities, whatever. Okay, so we will see calculation we will do, and write. So now we can start our question. The question is very simple. By the way, 2022, I'm seeing the questions in 2022 May November, questions are very easy, right? So we have to move and see. These are the net cash assets and book value. It means they are cost minus accumulated depreciation. This is net book value, right? So I am deducting, so that to be okay. Equity. Okay, move on. Yeah, this is your equity, and this, if you add both of them, this will be your capital employed. Capital employed means equity plus this one. So your capital employed would be, okay, 1282 plus 250. You can say this is working one. 1532, right? This is your capital employed. In rest we will do other things quickly, and now come, how much would be interest working to 250 into 10%, 25 to 50,000 into 8%, sorry, it is 8%. 8%. So this will be 250 into 0.08, 20,000. Interest on debentures will be 20,000. Fine. Trade payables are here. Trade receivables already given. Purchases for the year were 600,000, of which 80% were on credit. It means your credit purchases working 3, credit purchases 600,000, 80%, 600,000 by 80%, 480,000 are your credit purchases. If you divide this by 365, so divided by 365, 1000, 1315, your daily purchase would be 1315.07, right? This is your daily purchases of this much dollar. Credit sales for 30% of all sales, okay? But we do not have sales, so we will calculate. This is not an issue. Uh, the company had a gross profit of 40%. This is your GP percentage, GP margin, and the gross profit given is, remember, whenever you divide the absolute amount with this percentage, you will go back to the base, which is 100%. So if you, the working, I can say working third, if you divide GP by its percentage, then you will get sales, right? If your GP is 42,000, GP percentage is 0.4, 40%. So this will be 42,000 divided by 0.4, 105,000. Just 1 minute, please. Right? So your sales are 105,000, and this is total sales. This is your sales, complete sales, and credit sales will be 10. Credit sales will be 105,000, and it is how much credit sales are 30%. 30% are credit sales. So credit sales will be 105 into 0.3, 31,500. 31. This is how much? Okay, $600,000, and then 80. Just 1 minute. 420. Oh, this is my apology. It was 420,000 divided by 0.4, then it is 1050, 1 million. So another zero, right? If you take its 30%, this will be 315,000. This is your daily sales. You got daily sales, you got daily purchases. So you have all the information, so very quickly you can calculate this, no issue. So we can calculate, I'm calculating it here, but you can do on that side, which is, so number one, question number one, and is one, trade payable Just 1 minute. Okay, just 1 minute. Let me have calculator. It is okay. Okay, trade payable turnover in days. The formula is trade payables divided by daily purchase, right? Per day purchases per day. So how much are trade payables we have? This is our trade, sorry, this is total 42. So 42,000 are your, just 1 minute, 42,000 are trade payables. And what is your daily purchases? 1315.07. Then 42,000 divided by 1315.07. So it is some 31.9293. So we can say 32 days, 31.93 days. This is payable turnover in days. It is the formula for days. It means 32 days. Trade payable turnover is 32 days. Okay, very easy question. Number 2 was trade payable, trade receivables. So trade receivable turnover is equal to, would be your trade receivables divided by daily credit sales. So how much are your receivables? Receivables, this is 30,000 divided by credit sales. How much was our credit sales? It was here 315,000. So if you divide this, okay, 30,000 divided by 315,000, and how much it is coming? Trade receivables 315, just 1 minute. Okay, sorry, it was credit sales. My 315 was credit sales, it was not daily sales, so it was credit sales. If we divide this by 365, then it will become your credit sales, right? 315,000 divided by 315,000 divided by 365, 863, right? Your daily sales will be 863.01, right? So here you will write 863.01. So what will be your answer? Your answer will be 30,000 divided by 863.01, 34.76, or you may say 37 days. So 35 days. It is 34.76, or in roughly you can say 35 days. Trade receivable turnover. Come to now, your profit was how much? This is working for your profit was 182,000, and this 182,000 is the net profit which you have got after deducting the interest. And you are going to calculate, now we will be calculating ROCE, return on capital employed. So it is profit before interest, right, divided by capital employed. So capital employed, we have capital employed is here, which was 1532. We have 1532, but profit before interest we have after interest. So we have to add back. The profit interest is already deducted. So you have to add this back. Interest on debenture. So how much it was? Interest on debenture was 25. 250, 8%, 20,000. It was, okay, just 1 minute. We can, okay. It was 250, 250, and it's 8% interest, 20,000. So 20,000, it was 20,000 interest on debentures. So this you have to add back because it was deducted while calculating the profit. So you have to add this back. So your profit before interest is, you add this 182, 20 plus 182, this will be 202,000. Here you have to put 202,000 divided by how much? Okay, 202,000 divided by 1532,000. Okay, so 13 and multiply by if you multiply by 100, this is 13.19. So your return on capital is 13.19%. So we have done with the part A, which has 3 ratios, and I think this is all for today. So the rest question we will do in our next video. Thank you very much. If you have any clarification or doubt, you can write comments on the video. We will try to quickly help you out. Hope this video will helpful to you for your coming exam next week. Thank you very much and bye for now.